Thank you for joining me today on Behind the Coin podcast. I'm your host, Nako and Mbelle. We took a little break during the crypto winter, but we're back and we're more bullish about Bitcoin and crypto in general than ever before. And why are we bullish? We're bullish because people are still building. They're still building the infrastructure and companies are hiring within this space. As a recruiter, I can attest to you that people are hiring and they're building. And we've got some opportunities actually on our site, fintechrecruiters.com. If you're a trader, I'm looking for traders right now with professional trading experience to work within the crypto space. You have to have a minimum of one year crypto trading experience. So if this sounds exciting to you, please check out my website and apply to the positions. Now, my next guest is Tyrone Ross of NobleBridge Wealth Partners. Tyrone has more than a decade of experience in the financial services industry and is currently managing partner of NobleBridge Wealth Partners. He's worked with large wirehouse firms like Morgan Stanley and Merrill Lynch, where he gained investment management and financial planning experience, leading him to break away and become an independent investment advisor. Currently, he works as a financial advisor to early stage startups and has in-depth knowledge around blockchain and crypto assets, which is why we invited him to speak with us today. He's also a graduate of Seton Hall University and also a 2004 Olympic trials qualifier in track and field in the 400 meters. This year, Tyrone was recognized by wealthmanagement.com as a top 10 advisor set to change the industry. So we're really excited to have him on with us. He has some interesting views, and as an independent financial consultant, you are going to be surprised at some of the advice that he's given his fellow financial planning advisors, as well as people who call him for advice about balancing their portfolios with Bitcoin. So without further ado, here is our interview with Tyrone. And once again, before we get into the interview, everything that you hear on this podcast is not financial investment advice. So please consult your own advisors. And so here's the interview. Well, thank you, Tyrone, for joining us today. We appreciate you taking out time to speak with us. There are not a lot of people in Bitcoin that I come across who have some of your viewpoints. I actually heard you on another show and really wanted to interview you. So first of all, welcome. And let's get right into it. So tell us a bit about yourself and how you discovered Bitcoin.
Sure. Well, first of all, I always start these off by saying thank you for having me. I'm extremely appreciative of you sharing your platform with me. There are a million people that you can speak with who have an opinion on this space. And I'm grateful that you chose me. So now that that's out of the way. So a little bit about my background. So by trade, I am what folks would know as a traditional financial advisor. I like to refer to myself these days as a financial consultant, which we can get into the differences later. But started on Wall Street roughly 13 years ago on the institutional side and investor relations. Long story less long, found myself at Merrill Lynch for the last 5 years, where in 2015, I was introduced to Bitcoin by a friend of mine who's a Ruby developer. Like most people, you have two stories about Bitcoin: the day you heard about it and the day you actually bought some. When he first told me about it, I thought he was nuts. I was like, it's fake. It's not real. The whole deal. And then, he stayed on me and convinced me, early 16, somewhere in there to finally get involved. And here I am now. I'm a co-partner and owner of NobleBridge Asset Management, which we have two divisions: a wealth partners division, where I do a lot of the crypto asset management, early stage startup advising, and financial consulting, and a traditional arm where we do financial planning, investment management, portfolio construction, and everything else. So, here we are.
Great. I don't hear a lot of people talk about the financial planning aspect when it comes to Bitcoin. It seems like it's still something that's, very much a Wild West type of environment. There are not a lot of financial planners who actually will even go near it or touch it. So can you tell me a little bit about what kind of advice you give to people who come to you seeking to diversify whether it be, their savings, their own personal portfolio? What kind of advice are you giving people? Is this something that's even regulated or allowed?
Great question. That is a really, really good question. So as it stands right now, we don't buy, sell, or custody on behalf of clients. My situation is very unique as an advisor because my clients are very young. They're crypto natives, they're tech natives. So they basically were like, listen, we own this stuff. You better figure it out, right? And luckily, I knew about it. So what I do is try and get them, one, to diversify away from crypto. And then as part of a holistic plan that we develop with them is where does the assets fit in with their savings, their, college planning, their, desire to buy a home. So not much changes except for the fact that financial advisors who want to embrace this as an asset class, and I do believe it is an asset class, digital assets will become, the norm as wallets morph into, as brokerage accounts, rather morph into wallets and things of that nature. So if you embrace this as an asset class and you are advising clients, it just becomes part of a holistic relationship where your clients, again, they are experienced in it. They understand it. They want an advisor to understand it and say, hey, how does my allocation to Bitcoin have any relation to my position in Microsoft or to my 401k or, my desire to want to save X amount of money, per year. So it is a little bit of the traditional realm, but it's just opening up your mind a bit and looking at, again, younger clients who have significant amount of their money tied up in the crypto and getting them to understand the balance of financial planning and what it looks like around crypto assets.
Interesting. I'm always curious to learn a little bit more about the makeup of Bitcoin hodlers in particular.
Yeah.
Simply because I think there is this misconception that it's a certain type of person. And I know that personally, when I first started getting into Bitcoin, I wasn't a libertarian. And I know that this space is heavily libertarian. So there's a certain mindset.
Yeah.
But it really made me explore my own relationship with money. It's not just an education about money. You really start to realize how, what's the word I'm looking for? Almost naive we are. I realized how naive I was about the whole financial system. Like I really didn't know what money was. And I'm wondering if you personally have felt that Bitcoin challenges your relationship with your finances. If has it made you more feel more responsible? I mean, I know you're a financial planner, so obviously you have that more than the average person. But do you find that people that are into crypto or your clients that are interested in crypto, do they have to sort of grapple with their overall dysfunctional relationship with money? Does that make sense what I'm asking?
No, it does. And it's something that I talk about because I think one of the things that I've realized, especially with Black and brown folks, this is their first investment. For a lot of people that I talk to or have engaged with, I've been trying to get, people of color to invest in stocks forever. They just won't do it. But all of a sudden they wanted to buy crypto because they saw it going up 20% a day in 2017. So this dragged a lot of people into the space, Black and brown folk. People in general now, I think if you look at Twitter, if you look at a lot of smart guys who are libertarians, cryptographers, engineers, developers, they've had to learn about economics and finance and business and so many different things, game theory, all these things that come into crypto. And I think the average investor doesn't have to go that deep. But yes, it's forced them to look at, okay, well, I put $500 into this thing, and now that my 500 is 10,000. Now what do I do? right? It's forced people to learn about taxes. It's forced people to learn, about investing in general, right? Some people have learned the hard way, where they've watched it go up and then they've watched it come down. And as I was telling people, that's just your tuition that you've paid as a beginning investor. So yes, I've seen that. For me, just to be transparent, which I found myself doing is reading a lot more about gold and reading a lot more about commodities and reading a lot more about store value. So I think you can't be involved in the space at all and not expand your mind in some direction, because you're going to be forced to do that if you really want to understand it. And this is how I listen. There's really smart people on both sides of the aisle here. Really smart people who say crypto's a joke, and really smart people who love it. I think the really smart people who aren't paying it any mind haven't given it the attention that they should, because if they did, I think it's hard to really dig in here and then walk away and say, there's nothing there. Right? There's some really fascinating things, even if you want to look at behavioral economics, how people behaved around it with the mania and the bubble, around the religion and cult like of the, the Bitcoin maximalist view. If you look at the communities around the different altcoins, if you look at the communities just in general of all the different coins and the mind share and the people that get involved, there's so much to learn in this space, psychology, everything, if you really pay attention. So I think the average investor has been forced, again, to look at personal finance and just increase their financial literacy. Ladies and gentlemen like myself have been forced to look at the overall landscape of investments differently, to look at tech differently, to look at, a new digital form of gold and what that looks like. So I think it's forced everybody, no matter where you sit, to expand your mind around, what is actually happening here. And again, it's less about the tech and it's more about how money is being transformed. Like this is totally revamping money as we know it. And I think that's the perspective that really changes everything here.
Yeah, I couldn't agree more. And I think I'm also amazed at the really smart people on the other side of the aisle, as you mentioned, who still aren't on board. What do you think they're missing? Like, what do you think that they're overlooking? If you were a gold bug, for example, like, what is it that you think, we won't name him, pretty famous gold bug who knew about Bitcoin when I think it was $10 and is still saying it's going to go to zero. But what do you think he's just not grasping?
You know what? That's a really good question. I think when you look at that, I think the traditional investment manager or traditional advisor, they can't get behind something that, again, they can't, it's ephemeral, right? Who's the owner? Who started it, right? Okay, this guy is gone. It sounds really hocus pocus to them, right? That's the first thing. Not necessarily gold bugs, but again, a lot of traditional financial guys and large investment managers say, all right, this thing has no cash flow. There's no earnings. How are we supposed to value it? And I think that's the thing. So they don't then look at, okay, well, how do I value it? They're not on, they don't go on Reddit. They're not on, on Twitter and some of these groups. They're not looking at Telegram and all these other things and looking at the white paper. So they're just looking at it from a really surface level of, okay, this is something that was created. It's supposed to be an asset. It fails, in the traditional realm of what my mind thinks an asset class is or a store of value is, right? So, and again, some of the data is there. Okay, well, this thing went from 20,000 to 3,000. How is it a store of value, right? Gold has been around forever. So they're holding on to an old way of trying to look at, again, money being transformed in a new realm through software, through code, through math, through cryptography, through all of these things that they just don't really want to do the work to understand. So again, I think it goes back to that. And again, not to name anyone's name, but I think, again, instead of doing the work to really dig deeper, to dismiss it. And I think the other piece of that is, if you look at where a lot of these ladies and gentlemen are reading the information on blockchain and the information on Bitcoin, it's in traditional media who doesn't understand it either. So if they put out a really bad piece, right? There's the piece out now from Wired that I read it yesterday, and I tried my hardest, right? I'm like, this is just bad, right? This is just bad. And the gentleman doesn't understand it. But again, if you look at someone else that I won't name, a pretty big economist, he retweeted it. This is what I'm talking about. Blah, 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 blah. Blockchain's this, blockchain's that. So they're just reinforcing old habits from old media and old sources that don't understand it. And they wouldn't even know where to go to get really erudite information on an asset class that they don't believe is an asset class, but it's just tulips or seashells or whatever it is that they want to, they want to name it. And I think the other thing there, the last piece, is that they're very uncomfortable with the fact that the capacity of cryptocurrency to democratize financial services and abundance for all. They don't want that. They definitely want the wealth to remain in the hands of a few, and this is a way to disrupt that. And again, they all play in the same sandbox. They don't want that to happen.
Yeah, you're exactly right. And there are mainstream, if you want to call it mainstream, very credible institutions now that are on board. Institutions like Fidelity. I think Fidelity is so impressive. I visited the website Fidelity Digital Assets, and they have a whole educational section where they're explaining why they're in this space, what it means for financial services in general. And so it's one of these interesting dichotomies in sort of the traditional financial world, is that there are very credible, very vocal institutions that get it, that really get it, and they're sort of in the trenches, right, with the community. And then there are others who don't. So it'll be interesting to see how this all plays out. But speaking of companies like Fidelity and Bakkt, which will be launching, I think, anytime in the next month or so. What's your take on it? I mean, you're from that space, you're from that whole world. What are you hearing from your peers? What are you hearing on Wall Street? What are the Wall Street people really saying?
Great question. So the traditional Wall Street folks, and what I'm hearing personally, just from those that I know that I engage with, is, again, they're still very dismissive of it. So there's a few things that worry them, right? One is liquidity, right? Who's controlling this? They feel like there's whales controlling it, and the price is pushed around too much for them. The next thing is just the infrastructure, right? There's no one that they feel that they can trust, right? Fidelity helps, but that's just one piece, a qualified custodian, which is very important in our business, right? Where are you domiciling clients' assets? That's very, 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 very important. Like, for instance, we use Schwab for our clients' assets, right? So perfect example, right? The exchange and the exchange and that just got hacked, and supposedly the CEO died or something, yeah. Right? That would, right, exactly, yep. So that wouldn't happen in our business, because, again, so let's just say me and my partner just get up and disappear and go to Saint-Tropez or something. The client's assets aren't with us. We don't control them. They're Charles Schwab. So there's a qualified custodian that our clients know, all right, no matter what happens with Tyrone and Corey, our assets are safe at Charles Schwab. That's not necessarily the case now, and what has a lot of larger institutions on the sidelines, right? If you look at the futures market, very, very small. So, there's really no prime brokers in the space. So who's matching trades, right? How do I know I'm getting best execution? A lot of questions that people can't answer. To that point, right, I just read an article that JP Morgan is looking at Bakkt, right, which Bakkt is going to come out soon, which I think is going to be great for the space. And JP Morgan said, if we're going to do it at all, we're going to do it through them. right? Because you have a lot of institutions and, a lot of old brand name trusted sources that we trust in order with our clients' assets and our reputation. So I think that's what you have to look at here. And I think a lot of those who are, is Josh Brown calls crypto hippies, right? And those who are pushing crypto, you have to understand you have a legacy business that are very slow to move on anything. I'm a very big fintech head. Traditional financial services has been slow to move on anything that is remotely close to being beneficial for the consumer because they just cannot innovate fast enough. So they're still using fax machines and trade tickets. So now we expect them to embrace crypto. Not going to happen. So there's a lack of trust. There's a lack of infrastructure. There's a lack of liquidity. You're looking at an asset class that was led first by retail. That never happens. They watched retail get smoked. So now they're like, okay, a lot of these people have been washed out. Now, where do we go? If are they going to come back? They understand an investment sometimes that you burn your mouth on a slice of pizza. More than likely, you're not going to blow the next time. You're just not going to eat pizza. They realize human psychology and how that works. So I think you've even seen that in the space. Last year, a lot of great news. This year, more great news. Everything, even Coinbase, pivoting to institutions and family offices and pensions, which I don't like, right? That kind of makes me angry because, all right, so the sacred cow is the retail investor. Now, okay, well, now let's try and draw Wall Street in because they'll save us all. I don't like that, right? And again, maybe it's just because a lot of my background, because the fact that I work with retail clients. And I just, again, I've been groomed to care about the retail investor as a fiduciary that those, everyone is completely going around the corner now. Let's draw institutions in, and all the institutions are going to want to do is once they get set up properly, they're going to want to draw retail in and make them the sacred cow again. And I just don't think that's fair. So I think, again, I just think the infrastructure isn't there. I think as far as financial advisors go, again, they just don't think it's a viable asset. They don't understand it. They don't want to understand it. They look at the hacks. They look at, all of the exchanges, all of these things. Nothing. There's really no embedded trust yet. Now Coinbase is on the tip of everyone's tongue. So they probably have the most trust of anyone in the space. But again, we're still a long way to go from that, right? Coinbase being almost 7 years old. And you look at, right, a Merrill Lynch that's been around 100 plus years. It's just hard. It's just hard to fight that at the moment. And I think, it just proves, for one, that we're still very early in crypto, but more importantly, that there needs to be a change of the narrative. And I feel like I need to be one of the leaders of that change. The narrative have to change about what the opportunities are, the real opportunities, the real use cases, and a lot of the hopium and a lot of the things that are pushed out to get people, to feel like this is the end all be all. I think is dangerous because nobody in the traditional, financial services realm thinks that's serious. They don't take it seriously.
Interesting. Okay. So they're not taking it seriously. What about from what I've heard, and I'm not sure how factual all of this is, but many of the asset managers, they're not making the returns for example, the pension funds. So they don't have a choice but to look at an alternative asset class like crypto in order to be able to just pay out the pensions. Yeah. And how do you feel about the fact that these, for example, pension plans, I think are a good example, being really a gateway to the average person as opposed to the retail investor? Like, can they?
Great question. No, that's a great point. Pension funds are underfunded. They have to find other sources of return. And I think they should have some exposure to crypto at some point. But again, I think some of them have started. You saw last year with Yale, Harvard, a few people. It's not direct exposure. They're probably trying to get in through the rails, right? And companies that are building the infrastructure. I think that's what they're investing in. I think if you see that, that's what's happening here. Investments into Coinbase, and a lot of these different companies that are building the infrastructure for crypto. So I think there are some family offices, there are some pension funds that are being a little open-minded. And I've said this about my business. Wealth managers will be the last in. They will be the absolute last in the pool. Because again, you're dealing with the individual retail investor. You're dealing with large name brands that have to make sure that every single solitary thing is secure, because right? The private keys. We need a trusted custodian for that. Do we trust Fidelity to handle that? Okay, maybe. Do we trust Bakkt? Maybe. State Street? Maybe, right? But you get your Vanguards involved, or you get BlackRock involved, or you get a lot of these larger names involved. The more that get in, now people are going to say, okay, now I'm comfortable because they're doing it. If they're doing it, okay, I'm definitely looking at it, right? And I think David Swenson at Yale, when he did it, I think a lot of people will say, okay, well, if he's moving towards that realm, it's something we should look at. Now, there are some people that I follow on Twitter that work with family offices and work with institutions. Again, they are looking at it. They're looking to learn right now. And I'm going to post about this later on my Twitter page. Is I think if you're a financial advisor, you're in financial services right now, I think you pump the brakes on any client that comes to you about crypto. I would basically tell them, ignore it for the moment. The advisors need to learn. There should be no new investment, in my opinion, from someone that hasn't already been involved in my business, right? So I'm going to encourage my audience who are financial advisors and those working with clients. If any new client comes and they want to look at it now, it's a big learning curve. We're going to spend the next 6 months learning about it. And then at that time, if you're comfortable, we talk about it. But no one-offs. Oh, I see Bitcoin is down to 3,000. I want in. Nope. There's just too many things going on. The space is in flux. This bear market is going to be sustained. It's going to be a lot longer. And I think, again, if you are a family office, a pension fund, a Fidelity, a NobleBridge Wealth Partners, if you're Merrill, I think now is the time to sit back, learn as much as you can, develop a thesis around maybe 3 core coins or assets that you think are viable in the space, and then be able to speak to clients about those. And if you can't, then it's probably something that you should stay away from. And I think that's what a lot of folks are choosing to do by choice, but they're leaning on people that really know better to learn a lot more. I get a lot of requests from folks to learn, and they ask questions, which is great. I like to see that because people are just wanting to learn a lot more. And people have said, hey, I've learned a lot from following you or listening to your podcast, because I'm very, 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 very certain to make sure when I speak that I'm very clear and concise about this. I can speak to developers about it, and I can speak to the retail, consumer about it just the same. But I think being very high level and clear and cogent on just the basics is where we need to be right now. Everybody wants to be the smartest one in the room. And that's what's making it dangerous. And I've gotten a lot of feedback from institutional folks or traditional Wall Street folks that have attended seminars or conferences, and they're like, I didn't understand anything. They're just saying all that does is make it worse. So if we don't take a step back and try to educate people, this mass adoption or whatever people think is going to happen, it's not going to happen until it becomes very, very simple for people to understand. And people really don't even understand blockchain still. So.
Yeah, I agree with you. I think there's a lot of buzzwords and a lot of, like you said, the person that went to the conference and they didn't understand anything. I get a lot of calls as a recruiter from traders and people from the traditional side who want to pivot into crypto. They're very interested in it. And I tell them to really get hands-on experience. And it doesn't have to be, you don't have to buy $100 worth of Bitcoin. You can buy $20 worth. Mm-hmm, but I tell them, download a wallet, understand how it's actually working, because the learning curve is huge. And unfortunately, in this space, a lot of the terms do not make sense. So a wallet is not really a wallet. So there's a lot of like little things that you start to learn. And you'll only really learn that if you're using it. At least in my opinion, that's how I learned, right? I learned by actually, going on various exchanges and doing little trades. Again, I tell people you don't have to, don't break the bank. Like, have $50 worth of coins and just play around, and you'll understand. You'll see what a public key is. You'll see what a private key is. You'll understand that, and it took me a while to figure this out. For example, that your coins never really leave the blockchain. You're just transferring ownership. That's all you're doing. And once you understand that the wallet really, you're not downloading anything into your wallet, right? That's why your private key is so crucial, because if anybody has that, it doesn't matter where your wallet is, they can move it. So I explain this to guys that call me up wanting to know, how do I get into this space? Like, actually start owning this stuff, because a lot of people want to get into this space. They want to advise people on it, and they don't even own it themselves. It's like,
yep. Yeah, exactly.
It's like driving a car without, wanting to teach how to drive a car without owning a car or having a car. It's just weird.
Or having ever driven. Yeah, absolutely.
Yeah, exactly.
Right.
Exactly. So what do you think, where do you think we are in the hype cycle? Because you talk about telling people to stay off the sidelines and learn, right? Which I think is great advice. Like, right now in the bear market is the perfect time to learn.
Yep.
So where are we, you think?
I think we are 90% there, 10% of hype left to go. I think we need one more flush out, maybe get below $2,000, somewhere around 1,000, 1,500, and everyone's like, oh, it's definitely dead. The 60, 70% of coins or coin market cap that don't belong die. So I think the majority of the hype is gone, but I still think there's excess in the system. I still think there's still a lot of stupid comments and things that I see on Twitter and in conversation that these people just need to go away. The YouTube investment advisor needs to completely understand, all right, there's no way I can push this nonsense anymore. So the unfortunately, right, there's been a lot of people that's been hurt, a lot of people that have lost a lot of money, that have done a lot of stupid things, and it's unfortunate. But I think there is an opportunity now where, again, if we continue to learn, we continue to educate and look at what happened here during the hype cycle, I think it's an opportunity to, yes, if you've already been in the space and you want to accumulate, small positions. By the way, I didn't say this. Anything that I say is not investment advice at all. Don't take it as such. Speak with your financial advisor or financial consultant first. But folks that have been in have used this as an opportunity to say, hey, I'm doubling down. People that are not in say, okay, well, let me learn. So when it does come back, I can start to accumulate a position. So there's a bunch of things that are happening now, but I do think we still need one more good drop on the roller coaster before, we hit rock bottom, and then we can start to, trail our way back to a reasonable price. I don't know how long until we see 20,000 again, but it won't be anytime soon.
Yeah, I agree with you. I think we're going to go lower. I don't think we've hit bottom. And Quadriga, although it was in Canada, didn't really have an effect on the market. But I think we're going to see a lot of capitulations with exchanges. And I think if Quadriga were in the US, or maybe we're even a bigger exchange, I think that's where we're going to see a lot of fallout. And who knows, all of these stable coins, I don't really understand stable coins, to be honest, why we have so many. Right. I understand. Yeah. And I think, who knows, we might see something with either stable coin going not well. And there have been sort of rumors about some stable coins not, having what they say they have. and exchanges just not being able to continue to function, right, because of the low trading volume. So who knows? It'll be an interesting year. But yeah, I agree with you. I think I see a lot of people on Twitter also believe that we're only going to be in the bull market in 2020. So we're in for like a pretty long winter.
Yeah, strap in, get comfortable, get comfortable.
Now, in terms of Bitcoin's original message or original goal, which was to provide the unbanked, financial, I guess, leveling the playing field among the financially disenfranchised. How do you see that playing out? Because right now it's a store of value. How long do you think it will take us to get to where we thought Bitcoin was supposed to be originally?
Oh man, this is a topic that I have very strong opinions on. So I think you're starting to see that in some capacity in emerging economies or markets where, again, there's severe inflation, your Argentinas, the Venezuelas of the world, that are constantly talked about online and bantied about on podcasts and everything else. I think you're seeing that the ability for folks to be self-banked, another option outside of an actual bank or central banks, and using it as a form of currency. I think that's there. My issue, right, is there are a group of people here in this country, which is why I initially was drawn to it when I started to study it. I'm like, man, this is such an opportunity, again, for folks in inner cities and rural communities to learn about banking, right? Which one is, again, being a man of color that has grown up in the United States, and in this country, people of color really don't trust banks. People of color really don't. They're used to using cash. So this is a segment that is completely ignored by the crypto elite, who don't want to segment this population for the true form or use case, rather, that supposedly, right, peer-to-peer electronic cash system that Satoshi was talking about. People argue about whether what he was saying was about that or whether it was about a store of value. All right, that's a podcast for another day. But I think we are far from it. We're closer than we have been, because I think people are starting to bring to light, now that the prices come down, people have been forced to actually say, okay, well, what the hell is this stuff good for? Right. So I think we're closer. But for me, this is why I think a Bitcoin ETF is crap. I think there's been no unified effort to go into Mississippi, where 16% of the population is unbanked, Flint, Michigan, Compton, California, Newark, New Jersey, Coral Gables, Florida, all of these places all over the United States where there's inner city people, Louisiana, rural folks that could use this technology and understand what it means to be self-banked, right? And the ability to send money peer to peer, and what this is going to mean for them moving forward as the economy changes, and has been completely overlooked. And it's frustrating to me, because I feel like if you look at not only Bitcoin, but just crypto in general, what that means and what is ability to do, right? And I kind of pontificate about this on Twitter a lot, is the majority of folks who use mobile apps and digital banking apps are minorities, right? Mm-hmm. There are a segment of the population who rely on these things for all of their banking needs, all, right? Majority, some, but more, the majority, some, but some people it's all of their banking. The other piece of that is, without any real-time payment system here in the US, folks are hurt by that. So if I can get paid in crypto, and there's a company that's set up where I can get paid daily in DAI, right? And you mentioned stable coins. I'm actually a fan of a stable coin. I could get paid in DAI, and DAI is essentially like my crypto checking account. And then I can turn around and either turn DAI into dollars, or I could turn DAI into Bitcoin. and I needed the money that day because I'm behind on my rent, or I need to get my car fixed, or I need to go to the dentist, that's powerful, right? It doesn't have to be about the dollar's going away and Bitcoin is going to rule the world. No. What about the people that are struggling in the inner city to pay that was me. That was my family, right? The lights weren't on. The gas wasn't on, right? There's no money for rent, right? You got to go use money orders, or you got to use payday loans, or you got to use check cash in places. The use cases right here in the U.S. and all across the globe, but for right now, in the technology that's being pushed by Silicon Valley and venture capital, all these people, there are tremendous use cases right here that are viable, that everyone wants to push STEM and make STEM available to inner city kids. Imagine if we made STEM available and they learned about blockchain and distributed ledger technology and cryptocurrency to learn about it, because you can't learn about all of those things without all the things these kids should know anyway. Again, psychology, game theory, economics, finance, business, it's all there. You're giving them literally a wealth of information and another option to bank themselves and to pull themselves out of poverty. And why that's being ignored, well, I can get into why it's ignored. That's another podcast too, is beyond me. So I think, yes, that to me, having a love for fintech and how it's making banking and investment more inclusive, I think crypto falls into that. Bitcoin falls into that. And I think, which is why Cash App is so powerful, because for Christmas, all I was telling people, download the app. I'm going to send you money by Bitcoin. It's the easiest way for anyone to have access to it, right? So either they have Cash App or Venmo or whatever. So if you have Cash App, you swipe right, you buy Bitcoin, right? Right there, easy to use, peer to peer, the whole thing that everybody wants to cheerlead about. It's all there. The easiest way to do it. You know what I did? I made sure I sent it to some of my mentees who are struggling in the inner city, to single mothers, to my niece who has two boys, right? My great nephews, people who have realized that this is an opportunity that they feel they can't be exposed to already, when that's not the whole ethos of what crypto was. So anyway, I could keep going. As you could tell, I'm really passionate about it. So I think we're getting there. But if I have any voice in this space whatsoever, and before I take my last breath, I'm going to get people of color to understand that this is an opportunity that is unprecedented. It's not about your education. It's not about who you know. It's not about how much money you make. None of that. It's pure access. And there's a reason why they don't want to expose us to this technology. There's a reason why, because we should have been the first asset class that they've gone, the first class, rather, people that they've gone after to expose us to. If you really want to talk about economic equality, if you really want to talk about inclusion, right? If you really want to talk about self-banking and all of these things, you would go right into the inner cities of America and say, here's how we're going to help you empower yourselves to get up and out. You don't use banks. We know, we've done the research. Right? You have been marginalized by Wall Street. You have been cut out of the banking and finance system by the government, which has not adopted real-time payments. Here's a way for you to bank yourself if you have a phone or internet access to the internet. So anyway, I'm starting to sweat. That's my 2 cents on that.
Yeah, I completely agree with you. I think that no other technology that I've come across with levels the playing field the way Bitcoin does. And I tell people that. I say, as a woman of color, right? This is a crypto levels the playing field. It really does. The code does not care what color you are.
Exactly.
You just, download a full node and you're your own bank. Right. So I completely agree with that. And I think that we need to at least try and get more influencers in the community to promote crypto. I'm not sure how to go about that. I know that in the past, there have been a couple of very visible, Mike Tyson had Bitcoin ATMs way back in the day. I don't know what happened to that. I'm not sure what happened with that project, but we've had a few. It just, for some reason, just never took off.
Right.
But anyway, what about Twitter? I just the other day saw that Jack, what's his last name? The Twitter guy.
Dorsey?
Dorsey. Yeah, that's his last name. Jack Dorsey is now full on like huge Bitcoiner, it seems like.
Yeah.
And he's part of the Lightning Network. So what do you think that's going to do for Bitcoin? Like, how excited are you about that? Because I that really excites me. Very.
And he's always been a big proponent of Bitcoin. Like I said, he as I was just talking about Cash App. So he owns Square, which is the company that owns Cash App. So he's made that available. He talked about it being a native currency to he thinks either that or something else will be the native currency to the internet. So I think it's very exciting. He has a voice. He has a platform. He's spoken about in that same podcast that everyone is talking about what he did with Joe Rogan. He also spoke about the main thing that stuck out to me. We care about people who struggle financially. And that's important to me. So that's why it's huge. The Lightning Network, I love. Layer 2 solution, faster payments, rah. I love the fact that he realizes that he has a responsibility to make sure that people who have been marginalized and excluded from the banking system now have an opportunity. And I think that is fantastic.
Yeah, me too. I can't wait to hear. There's another podcast that he's going to be on talking about Lightning. So I'm really looking forward to that. Can't remember the name of the podcast, but saw it on Twitter.
Joe Rogan's, I believe.
Yeah, it's Joe Rogan's, but he's going to be on another podcast.
Oh, Pomps, I believe. Is it Pomps he said he agreed to do?
No, it's not Pomps. It's a guy in Australia.
Really?
Can't remember. Yeah, it's an Australian podcaster. He's a hardcore, like he's a maximalist. It's a maximalist. So you can imagine the maximalist has invited him to their party. That says something, doesn't it?
Yeah.
They're pretty tough. They're not the easiest group. Okay. So now there are a lot of people talking about tokenized securities, and I'm curious to know what your thoughts are about that whole tokenized security space.
I'm coming around to it. I've been looking at it. Listen, I think all assets at some point will become tokenized. Real estate, stocks, bonds, everything. But I don't think that it's the panacea that is being pitched as. Right? So I do think it's a space that's going to evolve. I think you're starting to see some really cool opportunities there. For example, I want to invest in Manhattan real estate. I want to invest in a particular part of Manhattan real estate in a particular building. Tokenization is going to allow me the ability to do that, which is really cool. So we're going tokenization, blockchain, again, crypto, AI, all of these things are going to make it really cool to be an investor in the future because you're going to have access to things that you never had the ability to do before. Not only the little guy, but the big guys as well. So I think I'm warming up to it. I think some of the use cases are cool that they're talking about. But I think, again, the end all be all of, it's going to, the market is this size and it's going to add this much liquidity and it's going to, I don't know. I'm not there yet, but I do think there's an opportunity for it.
Yeah. Okay. That's interesting. In terms of, you mentioned that you can see, a lot of great things happening because of it. What about the dark side of this entire space? Do you see a dark side? Because there's always a dark side, right? There's always a negative. So what are the negatives of us tokenizing everything, first of all? What does that do for our privacy? What does it do for government surveillance? What's the dark aspect of all of that?
That's a great question. So for me, I think I always go back to the investor, right? I feel like if there is not enough education, you are now making these asset classes digital, you're tokenizing them, and again, you're excluding a certain segment of investors who really aren't up to speed on this. I think that's the first thing. I think the second thing is, right, the concentration of wealth and the ability to segment these investments into opportunities for other investors without some laws changing. What good does tokenization do if, all right, yeah, you're going to tokenize a building, but there's still accredited investor rules here in the US. And they don't have access to that. But the only tokenized security that I have access to are shares of Apple or something like that. So I think there's a lot of things and that's the one key here. As technology changes, the rules around investing are going to have to change as well, so that everyone has access, that everyone is, everyone has fair and equitable reach to these investments. So I think if tokenization becomes a thing, but some laws don't change, then again, you still have the access and power in the hands of a few, which is not the whole point of what we're trying to do here with this technology and crypto in general. So.
True. Very, very true. In terms of the people raising funds, though, do you think that it changes the game for the actual fundraisers as opposed to the investors?
Oh, yes. So back to that. So if you look at ICOs, right? ICOs has morphed into STOs now, right? Security tokenized offerings. So yes, it's. I think that's a good thing. I initially thought the ICO platform was a good way to raise capital because you cut out venture capitalists, right? And you kept more of that money to do your business. But unfortunately, they were raising hundreds of millions of dollars off of white paper, right? And haven't delivered anything. I think now if you look at STOs, I think those that have funds and are raising capital, and there's a few that I follow on Telegram, they are doing some really cool things there. They are raising a lot of money because I think people see that as the ability to articulate it to investors is a lot more clear and they can understand that. And I think that's why you're seeing real estate banty about more than anything else. So yeah, I think it's great for those that are raising funds and that are raising capital. Again, there's a lot of things that have to change and rules around that. Like what does that look like for the everyday investor? If my client wanted to invest in that, what does it look like? Right? How would they do it? What's the best way to do it? Is that something that's going to be able to settle at Charles Schwab or Fidelity? Right? So, it's very interesting, but I think, yeah, for those that are starting funds and those that are raising capital around the space, it's great for them. But whether it's going to be great for the people who are giving them the money and they're investing alongside of is something different.
Right. Exactly. Now I'm going to get to what you may want to do this, you may not want to do this. I know that everything you say is not, investment advice, but do you have any price predictions for Bitcoin at the end of 2019?
I don't make price predictions, all I'll say is this, right? I will never make a price prediction. I'm not that smart. No one's that smart. We don't know what's going on with the price. But I will say this, and people could take this however they want to take it. If you look at 2018, there was so much good news that got overlooked that personally for me is not reflected in the price. When it will be reflected in the price, I don't know. But there was so much good news and so much good development. And I think if you look at going into 2019, some of the things that are going to happen, some of the news already that is happening, when a lot of this starts to be reflected in actual use cases and in actual adoption, who knows where the price will go? But that's just something I don't do.
And I respect that. That's fine. A lot of us fell on our faces by having price predictions for last year, and they were so far off. At least mine were. Now, a lot of people are saying that companies like Amazon and Facebook are actively working on projects and will most likely release their own token. What would that do to Bitcoin? Do you think it would just demolish the price? Do you think it would help it? What are your thoughts on that?
I mean, I think it will. I think it'll help. Here's the thing. I believe, and I've said this, and I didn't really put out a formal 2019 predictions or anything like that. But I think at some point, some of Facebook, Amazon, Google, we can keep going on. We'll get involved in the space at some point. Right. And Facebook, it seems to be further along with doing that, with something about a stable coin or something like that. Right. They have a lot of users. I think because here's what I think happens. I don't know about you, but I came into the space. I was a big Ether guy. Right. It was Ether first. Right. My friend did all this work to tell me about Bitcoin. I'm like, oh, Ether. Right. So I put most of my money in Ether at first. And then I gradually came around to Bitcoin. I'm not a Bitcoin maximalist now, but after learning a lot more, I thought that had the most utility. Now, I think however people come into this ecosystem, right? Most people start investing in stocks and penny stocks. And then they realize, oh, there's General Mills, there's Johnson & Johnson, there's Facebook, there's Altria, there's all these big stocks where it's safer, I can make more money. So, and they start to learn. So I think if people are introduced to crypto through a larger tech company or through any type of portal where they get access, it may not have to be through Bitcoin. I think ultimately they will end up there. And I think that'll be good for, Bitcoin moving forward. But again, I just think it's a matter of how people get access and how they get exposed to Bitcoin, whether that's through an app, whether that's through their investment advisor at some point. I think we're far away from that. But more exposure to it, I think, is key. And as people start to learn more about crypto, they can't, in my opinion, I don't think you cannot help and be like, okay, I have to have some type of allocation to Bitcoin.
Yeah, definitely. I agree. I think there are a lot of people I know that have, got through with other coins, not Bitcoin, and eventually, ended up having more allocation to Bitcoin than any other token. So yeah, I actually agree with you. Now, where are there any projects that you're excited about that are happening in the crypto space that you want to talk about?
So I'm excited about Lightning. I think Lightning is exciting. Again, fast, transaction times. I think what you're seeing with this passing of the torch, I think that's really cool. I think the UX on the Lightning has been a lot better. So the use cases, right, still a little clunky, but I think if they can fix that where the average person could use Lightning to pay, I think that's really cool. I'm fascinated by Mbelle. I'm barely smart enough to say that, but I think I was fascinated by Grin and Beam. So I think those are two that I would keep an eye on. And lastly, and I know this isn't sexy, but I think MakerDAO and DAI, I think, are fascinating to me because of the collateralized debt positions. If you look at, the dApps and all those other things on the Ethereum blockchain, it really hasn't gained any traction. MakerDAO and DAI has. And even with Ether getting smoked, DAI has been relatively stable. I think stable coins have a place because, again, if you know traditional finance, you know about money markets, or you know about cash savings accounts or anything like that, where people just want to be able to park cash until they're able to move in and out of certain investments. And I think it's going to make it easy to pay people, as I said, or have them, the ability to earn crypto at some point. So I know it's stable coin sounds boring. It's supposed to be boring. But I think if you really take a deep dive into MakerDAO and DAI, I think it's something to be really impressed by if you're in space, and then your mind starts to, go gaga over the opportunities that it presents.
Cool. Very interesting. Yeah, MakerDAO I know can be quite technical. So I think it's for a lot of finance nerds, in terms of all the things that you could do with it. Now, where can people reach you if they wanted to reach out?
So the main place where I'm always running my mouth and talking is on Twitter at TR401. You can find me on LinkedIn, where I also post a lot of thoughts and videos and things like that, at Tyrone Ross Jr. The name of the firm is NobleBridge. And I'm working on a YouTube page, and I'm working on a website right now. And then, our company website, hold on, I'm going to give you the exact, because we just changed it. Bear with me. So people can go to the website if they like, but everything is available right there on my my Twitter is NobleBridgeWealth.com.
Perfect. Lovely. Well, it was wonderful having you today, Tyrone. We learned a lot. I know I learned a lot. And yeah, I look forward to having you back. Perhaps later on into the year, we can talk more about, all the things that have gone on for the year. So thank you so much, and have yourself a wonderful day.
Thank you so much for having me. I appreciate you.
The views and opinions expressed on any program are those of the hosts, co-hosts, and guests appearing on the show, and do not necessarily reflect the view of the owners and producers of the show. Paid advertisements in form of audio announcements may appear throughout the show, including this one. Advertising can also include print and other digital formats. The owners and producers of Around the Coin do not endorse or evaluate the advertised product, service, or company, nor any of the claims made by the advertisement. All programs are subject to a one-time charge for professional editing fees, for which the interviewing guest or guests may have contributed towards. The owners, producers, hosts, co-hosts, and guests on the show are not financial advisors. Any investment advice or opinion cited during the show is for information purposes only. None of the content is intended to be investment advice. Seek a duly licensed professional for investment advice. If you believe there's been any violation of your copyright, trademark, service mark, or any other type of intellectual property, please inform us in writing by sending an email to legal@aroundthecoin.com.